Okay, so Grameen Foundation has been working primarily in three areas. Our biggest focus area is financial inclusion, which is about access to financial services for low-income populations. The second focus area is health and nutrition. And the third focus area is agriculture. And there's a kind of common element across these three program areas, which is about use of technology and digital solutions across these three. So how we can leverage technology in the sector of agriculture so that you can improve the incomes of smallholder farmers. In health and nutrition space, how you can leverage technology for creating awareness about things such as immunization or nutrition practices. And our biggest area, which I mentioned, is financial inclusion. We have been kind of leaders in taking digital finance to the last mile through both addressing the barriers on the supply side and addressing barriers on the demand side for digital finance. So that's generally what Grameen Foundation focus areas are. So Grameen Foundation has been really privileged to have a very, very long-standing relationship with all the donors and partners that we have been working with. I'll give you an example of, say, Citibank City Foundation, the MetLife Foundation, JP Morgan, Wells Fargo. All the partners that we have been working with, they have been supporting Grameen Foundation programs for years. So they would support us for one phase, say 2 years, 3 years, and then they'll support us for another project or next phase. Given the track record and credibility that we have established, and the quality of our outputs, quality of our programming, which has been what has really helped us in attract and retain our funding partners such as these. What we also find interesting is that in most cases, the funders is not looking for a strong implementing agency which knows the answers to all the questions. And an honest funder will tell you that maybe you don't have answers to all the questions, and maybe I don't have answers to all the questions, but together, can we ask those questions and find a way to have answers to those questions? So in that sense, having an honest conversation with our funding partners actually helps us in designing innovative programs which address new challenges that we come up with every day. So Grameen being a rather small organization, that's our crucial role, how we differentiate ourselves from other organizations, that we don't implement large-scale programs, but our core focus is on designing innovative programs which can solve a big problem. And then we, of course, place a heavy emphasis on evaluation and research across all of our programs, and we believe in knowledge sharing. And sometimes the outcomes are not what you expected, sometimes outcomes are good, but in all cases we believe that there has to be a very good and healthy dialogue between us, the implementing partners on the ground, and the funding partners, so that we all appreciate the challenges, the unexpected nature of things which you sometimes have to suffer, and what we learn. So for us, learning is as critical to our programming as program achievement itself. So in terms of challenges, let me first talk about the implementation side challenges. I'll give you an example. We of course all know about the demonetization episode and how it affected and disrupted so many things. And we had like 3 different projects under implementation at that stage. And in 2 of the projects, actually demonetization led to a disruption of the project plans. So we could not, implement the activities as planned because the focus of market itself had changed. However, in another project, a third project, demonetization actually helped in fast tracking the achievements of that program, which is also fascinating because most people only look at demonetization as disruptor. The program that I'm talking about is the one where we had planned to do financial education to promote the usage of bank accounts, and then demonetization happened. So suddenly everybody had started to actively use their bank accounts. So those kind of unanticipated things sometimes happen which can affect your program implementation. There's another even bigger and more important implementation side challenge, which is about what is the willingness of your end client to take up your messages, to take up the products and services that you intend to deliver. And there we might find challenge if you have not factored in their needs and there are barriers in your program design. So sometimes you may go to the ground with a program design that you believe is right, addressing a need that we believe is the client's need, and if that assumption is not true, then one end up finding that there is not great uptake of the program. So making sure that your programs and strategies are addressing the client need is critical. So that's the implementation side, what I would share. On the funding side, of course, we, as I mentioned, have worked with a number of funding partners, and all the partners that we have worked with so far have been long-standing partners for the Grameen Foundation, and so they have funded us, one cycle after the other. But still, when we go to explore new funding opportunities, what we find is that every new partner would first want to start small with us and say, okay, let's do a pilot to show that this actually works, that this actually can deliver result. And that sometimes is an infructuous exercise, because we have already tested out a model, and that model is ready for take up. So in that sense, sometimes we go in a never-ending pilot after pilot mode, instead of taking some of the successful models to the scale. The other is, we are also seeing a trend in the market that the funding cycles are becoming much shorter, especially because you asked about the CSR funding. The CSR budgets are coming from the net profits of the organization. So corporations want to wait, and know how much their 2% will be before making commitments, and then they are not interested in making long-term commitments, because they don't know how their financial performance will be in future years. And that somehow disrupts the program development cycle, because many of the programs that we do are long-term in nature. In very short-term programming, it's difficult to find solutions which are really difficult problems, intractable problems. So in that sense, there's a kind of disconnect between the kind of nature of problems we are trying to solve and the kind of money which is there. So that's the challenge we face. But yeah, of course, also on the positive side, because digital finance and financial inclusion is something high on the agenda of the government and a lot of companies. So I think we're also finding a number of willing partners that, okay, if digital financial literacy is effective, then people can start using a number of new products and services. You look at the adoption of, let's say, digital payments. You look at the adoption of pension. You look at the adoption of health insurance. It's very, very low right now. And we believe that for long-term resilience and financial security, everybody needs to have access to these products. So in that sense, if our digital financial literacy programs are effective, then there will be greater demand for these kind of products, which kind of creates a new set of supporters for our future programs. Sure. So sustainability is actually absolutely critical from our perspective, because as I mentioned, we want to create models that are sustainable and which can be taken to scale. Now, in order to ensure sustainability, I did mention about the first factor, which is to ensure that there's demand for what you're delivering. That's one. And then there are two other critical factors, which is what we try to address through our programming. One is the demand side barriers. That if there's demand, then only you can sell that product. So we try to make sure that people have the skills and access to information which helps them make informed choices, so which helps you address the demand side barriers. And then we also make sure that you don't end up with supply side barriers, so that you don't have to travel 5 hours just to withdraw money or to make a payment. So you make access convenient, so that at your doorstep, on your fingertips, on your mobile phone, you can access the service that you want. So by addressing supply side barrier, by addressing demand side barrier, and paying attention to some of the behavioral aspects, so that we build into our programming. For example, how small nudges can help in achieving behavior change, how setting up financial goals with the household before delivering financial education training can influence behaviors. So we make use of these kind of research on these aspects such as behavior change, behavioral economics, and integrate those learnings into our program design, which ensure that when we say that we are doing financial education to do uptake of new digital finance products, it's not just a one-off transaction, but it's a sustained behavior change, so which is critical. And then of course we have a very robust monitoring and evaluation framework which we apply on all of our programs, and we have a very strong in-house capacity, and all of our projects do get very rigorously evaluated, where we measure what's the level of change on different aspects, what's the level of change when it comes to information about the new product, what's the level of change, degree of change when it comes to adoption of the new service, and how frequently they are using it, what is their willingness and what is their kind of inclination to use this service in future, or to recommend this service to their friends and family members. So all of these factors make the outcomes sustainable.